Let's talk about tax and financial discipline. Small business taxes usually don't just become stressful overnight. It's more of a slow burn, right? The friction builds up when your money, your records, your tax obligations, and your daily review habits just aren't connected early enough. It almost always starts with scattered financial activity. We've all been there. A receipt goes missing. A bank transfer isn't labeled. Maybe GST or HST gets mixed right into your ordinary cash flow. Or a personal expense accidentally gets paid from the business account. Oh, and that spreadsheet, only getting updated when tax time is right around the corner. Look, at first, these little things don't seem like a big deal, but give it time. They snowball into total confusion, missed deductions, unnecessary CRA exposure, and really expensive cleanup work for your accountant later on. So how do we fix this? Well, it helps to see your business as an interconnected system. In the Built to Thrive framework, there are 4 key domains, and if one is weak, the whole system feels the strain. In this explainer, we're zeroing in on tax and financial discipline. This is the structural domain specifically designed to stop that chaotic, scattered record keeping from taking root in the first place. Honestly, getting this right requires a bit of a mindset shift. We need to stop thinking about this as just filing a tax return once a year. It's really about building structural habits, systems that automatically organize your income, your expenses, receipts, GST and HST, owner payments, and your monthly routines. When you have this discipline, your business becomes so much easier to explain, both to yourself and, to the CRA. It gives you this calm control and makes handing things off to your accountant completely painless. Now, while the core idea of financial discipline applies to everyone, the actual details, well, they depend entirely on a major fork in the road: how your business is legally structured. Basically, we're looking at 2 main guide paths here: the sole proprietor and the incorporated owner-operator. Let's look at the sole proprietor path first. Here, you basically are the business. So your main goal is just simple, practical separation. We're talking about effective record keeping, tracking expenses clearly, and having a really sharp awareness of when you might cross that GST or HST threshold. You want to get to a place where you're reviewing your money monthly and you're ready for year end, but without making the whole system more complicated than it needs to be. It's not about perfection here, it's just about consistency. On the flip side, if you're an incorporated owner-operator, the stakes definitely shift. A corporation is its own separate legal entity, right? Because of that, you need incredibly clean corporate records and a super strict separation of any owner transactions, whether you're taking a salary or pulling dividends. This path absolutely demands robust GST and HST review, really rigid monthly routines, and much smoother year-end preparation for those heavier T2 corporate tax filings. But here's the really great news. Regardless of which of those 2 paths you're on, mastering your financials follows the exact same development model. You don't have to invent some custom progression from scratch. Both paths follow the same climb. That climb happens in 3 distinct stages: awareness, practice, and maturity. You literally just take these one step at a time. You start with a basic understanding of your obligations, move into active habit building, and eventually arrive at a fully matured financial system that practically runs itself. Let's break those down. Level 1 is awareness. This is ground zero. Before you can optimize anything, you need to understand what actually matters. How does money literally move through your business? You need to know what records should exist and where the usual problems begin, like, accidentally mixing personal funds or losing track of tax installments. It's all about spotting the friction before it turns into a total crisis. Once you've got that awareness, you step up to level 2, which is practice. This is where you roll up your sleeves. It's the active building phase where you lock in non-negotiable habits. You're diligently tracking expenses, keeping those receipts legible, reviewing your money on a reliable monthly routine, actively watching your GST and HST, and making absolutely sure owner activity stays crystal clear. This is where the real day-to-day work happens. And if you stick with those habits, they eventually unlock level 3, maturity. This is the sweet spot. You move away from basic reactive tracking and into a complete, reliable financial system. The business no longer relies on your memory or some stressful last-minute catch-up marathon in April. Because your numbers are accurate and current, this mature system actually supports your year-end prep and frees you up to make much better, forward-looking decisions. I do want to pause here for a second because this is absolutely crucial. The goal of all this is not to turn you into an accountant. I promise. You don't need a finance degree and you don't need to tackle everything at once. The actual goal here is just to help you understand enough so you can keep better records, avoid totally preventable problems, and honestly just ask your professionals much better questions. Ultimately, mastering tax and financial discipline transforms how your business operates. It pulls you right out of the chaos of scattered records and drops you into clear, calm control. It really boils down to three powerful things: clean records, fewer surprises, better decisions. When you have those, the financial side of your business becomes a true asset. So the next step is up to you. Choose your guide path, sole proprietor or corporation, and just start where you are. Pick the one area causing the most friction right now, whether that's visibility, separating your cash, or getting ready for year-end. Keep this core philosophy in mind. Clarity reduces friction and structure reduces stress. So looking at your own business today, what is the one scattered financial habit you're going to structure and solve tomorrow?